Canadian convenience store operator Couche-Tard has hiked its bid for the Japanese-based parent of 7-Eleven. Now, that Japanese company turned down an earlier approach by Couche-Tard, which was valued at the time at more than $38 billion US. This new approach from Couche-Tard, said to be worth about $47 billion, would be the largest ever foreign takeover of a Japanese firm. Let's get more from James Callahan, Portfolio Manager at Barometer Capital Management. Great to see you. Thanks for joining us.
Always a pleasure.
What are your thoughts on Couche-Tard? Is there a risk they're biting off too much here?
Of course, and as you said previously, they're set to do, if they are to complete this deal, the biggest equity offering in Canadian capital markets history. Combined with a significant debt issuance as well to get this done, combined with divestment of some of their assets, and so we're on the sidelines for now. With this deal, fortune favors the bold, of course, and so we'll wait and see. We wish them well, but for now we're on the sidelines.
That's interesting. Let's have another look at the stock because it has come down. A massive equity issue. Apparently, it could well be well over $18 billion US.
Of course, it's a big overhang on the name for now, and we'll see. I mean, this new deal was delivered last month. We're just hearing about it for the first time now. So I think that indicates that the parties are quite far apart here. And we'll see. There's potential for a bidding war. There's potential for significant private equity interest in 7&I Holdings as well, now that it's in play. So we're just taking a wait-and-see approach. The chart isn't there for us right now. It's one that we've been involved with in the past, but we'll wait until these overhangs come off, but we wish them well.
And it's such an exciting industry because, big part of it is selling smokes, and that has been eroded by declining tobacco and illegal cigarettes and of course, gasoline, the future of gasoline fill-ups is up in the air.
Yeah, and this move would place them as, I think, in the top 5 retailers globally. So it is a huge deal. Hopefully for the shares, they can get it across the line. It would be interesting.
What about Rio Tinto paying up here to buy a lithium company?
Absolutely, and we don't own Rio at the moment. We're involved in some other materials names, but it probably is the right time to make a big lithium move. As you say, prices are down, and it's a key component of a lot of things that are hot right now in terms of batteries. So.
Yeah, some observers are saying it's interesting. Often we see mining M&A when everybody's jubilant and metal prices are high, but they're making a contrary move here, a counter-cyclical move, you could call it, I guess.
Exactly, and over time they've proven themselves to be good acquirers. It's been a way that they've decided to grow.
Although they did overpay for Alcan all those years ago.
That's right, yeah.
But interesting, yeah, lithium, the world has too much of it, but presumably electric vehicle battery demand will grow.
Of course, it'll grow, but right now we're in a situation where demand for EVs has been compressed. So we probably see supply come off for EV production, and it's just been a trickier time for a multitude of reasons for EVs. So the time's probably right to make a move in lithium right now.
I'm old and cynical. When I look at talk of breaking up Google, I don't know. Is America going to really go after one of their internet giants?
It's really tricky. We think probably no. The FTC and the DOJ have proven themselves to be activists under the current administration. We'll see if that changes or doesn't change in a month's time. A lot is up in the air. The news last night is just one piece of information in what's going to be a multi-year case. The judge in charge hopes to have this wrapped in August of 2025. And after that, we're going to get a lot of appeals and things like that. This is going to be a long process. And so a lot of headline risk on the name right now. There are definitely better places to invest in the Magnificent Seven, if you want to say that, or mega cap space in general.
Meta and NVIDIA are among your favorites in tech.
Absolutely. So, these names are talked about very often, so I don't have too much to add. But what I'll say specifically on Meta, they have found religion on expenses. Over the last few years, they've taken their year of efficiency. They've really extended it. They've taken it quite seriously. And I guess recently what we've seen is a nice, healthy maturation in the company. They've started to pay a dividend. They've also announced that they are starting to see some of their investments in AI start to influence their recommendation algorithm. I've noticed this anecdotally. And so that's coming through in engagement in the core business, which is amazing.
Give us that again. Sorry, what have you noticed?
So they've talked about their investment in AI, starting to improve their recommendation algorithm inside of their core business. So they're seeing Instagram and Facebook presenting more engaging content for the viewer. And so we're seeing more time spent on those apps, and we're seeing more DAUs, more MAUs. So it's just, it's proven now that rather than this kind of offshoot side Facebook Reality Labs business where they were just investing and that was kind of over here, it's actually started to impact the core business now in a positive way. And so that likely continues, and it's great for ad pricing for them, which is amazing.
And you've noticed personally the content they seem to be bringing is more interesting.
I certainly have, and I'm sure viewers have as well. It's my screen time when that report comes on Sunday. It's been up definitely.
Yeah. And DAU is daily average user.
Yeah, daily active user, monthly active user.
You also own Apple. Are you concerned though about apparently slowish sales of the new phone?
We are. Apple. We were never too positive on the outlook for iPhone 16. I think that iPhone demand has been compressed, and there are some issues with that name. They've proven that they're having a more difficult time innovating than the Apple of old. But it's one of these situations where, despite issues with iPhone demand, specifically in China, it's still been a winner. They pay a nice dividend. It still is a good business, despite some of the short-term issues they've had.
The U.S. bank earnings kick off on Friday. What will you be looking out for in particular?
So we've got J.P. Morgan and Wells Fargo, Bank of New York on Friday. We have the balance of the large cap U.S. banks next week. Some of the things we're looking for, just given the current market, obviously with rates down, we're expecting some compression in net interest income. We're thinking down mid to low single digits year over year, which isn't really an issue. Besides that, we're going to be looking for evidence of what they plan to do with excess capital, given that now it seems like the capital requirements of Basel III are less onerous than had been previously expected, which is great for these names because they've built excess capital. We don't know how they plan to return that to investors through dividends, share buybacks, and special dividends and the like. So we hope to get some nice color there as well. But we own J.P. Morgan, we own Bank of America in the large cap space, we own Goldman for the capital markets business, and we expect to see good earnings.
James.